This is Market Insights from Southwest Investments, where we dig into current events and how they affect the markets, but also how they might impact your financial future. Welcome to Market Insights from Southwest Investments. Today is February 25th, 2020. Joining me today is Bart Shannon. Bart, welcome to the show.
Thank you, Rick. Glad to be here.
Thank you very much for being here. You know, yesterday, the 24th, we saw a huge drop. Not really. A huge drop it's not like it used to be. 1,000 points is what happened.
Yep.
It's a much smaller percentage, right?
Right. A little over 3%.
So it's not as big as what a lot of people are concerned about when you see a huge number like 1,000. But is that what we're going to see going forward? You know, is this volatility something that we're going to see ongoing?
Well, we always have volatility, right? And yesterday's volatility was blamed on the coronavirus. Now, is that a valid concern? Well, the coronavirus obviously is affecting a lot of Asia, and that can affect the flow of goods across the ocean.
Yeah, and we've seen it locally here, at least in some aspects.
Yep. So bottleneck on the supply chain. But the other thing that we've had, which is very interesting, is on the chart next to me, you can see the 3-month Treasury now exceeds in yield the 10-year Treasury bond. So what does that signal? What that signals is...
And that's the inversion that everyone talks about all the time, right?
Correct. That's the inversion. How is it possible? How does it make sense that a longer bond has a lower yield than a shorter bond? And what that has to do with is the perception that things are going to get scarier in the stock market. Fear. People running to U.S. bonds, buying bonds, and driving down the yield.
And bonds aren't the only thing that people go to.
No, we see gold doing the same thing.
Right.
So what we see is, if you will, a fear index where people are investing in defensive bonds, gold, some other things are also moving, that signal a real defensiveness. At the same time, on the other end of the field, up until the stock market dropped 1,000 points yesterday, we were within 1.5% of the all-time high, which was only set just a few days ago. So what you have is you have a real strong feeling that things are going to get better and a real strong feeling that things are going to get worse. Now, time will tell.
Right.
One of them is going to be right, one of them is going to be wrong, and there is a saying on Wall Street that bond traders are the smart ones. We'll see if that pans out. Now, I hate the phrase, but this time it's different. But I do need to point out that of government bonds, and that's federal government, but also municipalities, and our corporate bonds, still have higher yields than many of the bonds available worldwide. So what does that mean? What that means is U.S. investors are not the only ones buying our bonds, but more and more foreigners are buying our bonds to get that higher yield.
And that's been ongoing for some time now too, right?
True. It's been ongoing for some time, but if the world is getting scarier because of the coronavirus, worldwide, people looking for safety look to our bonds.
Well, very good. Thank you so much, Bart, for that insight. I appreciate you coming here this morning, and thank you for joining us. We look forward to seeing you next time. Thanks so much.